90.3 WHPC now presents Law You Should Know. The law affects every aspect of our lives, our home, our jobs, and our recreational activities. Now, learn about the law and how to protect yourself against the loss of your liberty or property, and learn how to stand up for your rights and seek compensation when you have been wronged. Your host for Law You Should Know is attorney Kenneth J. Landau, a past dean of the Nassau Academy of Law, and frequently lectures to lawyers on ethics and avoiding problems with clients, and to the public on how to choose and use lawyers. This is Law You Should Know on the voice of Nassau Community College, 90.3 WHPC.
Hi, this is Ken Landau, and welcome to Law You Should Know. Today, we're going to talk about sales tax refunds, and our special guest is Mark L. Stone. He's a CPA and has a Master's of Science in Taxation. He's also the head of the managing partner of Sales Tax Defense right here in Deer Park, Long Island. He's been a prior guest on the show, but today we're going to focus on sales tax refunds, how you might possibly get money back because of sales tax issues. Mark, welcome back to Law You Should Know.
Hi, Ken, and thank you for having me back.
I'm sure everyone is anxious to hear about how they can actually get sales tax refunds. So generally, what's the idea of a sales tax refund and how you help people accomplish that?
Well, I guess to be a little more specific, it's generally for businesses and not for individuals. And it comes about from one of two situations. The first situation is, surprisingly, a lot of businesses just make math mistakes when they prepare their sales tax returns. They add up two numbers, 1 plus 1, and they end up remitting $3 to the government, believe it or not. And simply by checking how they prepared the return, very often we find that we get companies' money back. The second way that we get a lot of money back for a lot of different businesses is that the right sales tax policy for any company is generally to charge sales tax. But New York State has many exemptions that allow businesses to legally avoid paying sales tax.
And for the recipient, the customer, to avoid paying sales tax as well.
Well, right. The customer would issue some type of exemption certificate to the seller, and the seller wouldn't charge them sales tax. But if a customer doesn't know that an exemption applies, they don't know to give a certificate, and then the seller charges them tax. And what we can do is we can come in after the fact and review the purchaser, the customer's use of the items, what they're doing, how they're selling something, how they're making use of the item that they just bought. And if an exemption did apply and they didn't take advantage of it, we get them the sales tax back directly from New York State. In addition to that, we often get them interest on that assessment or that tax back from New York State.
Can you just give us a quick example or two of that situation and how they on their own filed for it, or you were able to help someone make that claim?
Well, recently we had two different situations. One was a manufacturer, and they went out and they bought all sorts of heavy equipment, conveyor belts, and other things for their process of making an item here on Long Island. And they paid sales tax on that. New York State has a very broad exemption for manufacturing equipment. So all of that equipment they bought, all of the repairs to that equipment, all of the supplies and utilities that power that equipment, the oils and other things that went into running that equipment and making sure that it was maintained properly are all exempt from sales tax. And we were able to get them about $125,000 back directly from New York State.
And certainly that's not small potatoes. And that may apply to many factories or distributors or other consumers on Long Island.
Absolutely. And that money goes directly to the bottom line because there's no costs associated with that money. And on Long Island, there's a tremendous amount of light manufacturing that, people think of manufacturing as steel mills and auto plants, but we do a lot of injection plastic molding here on Long Island and other light industries that this all qualifies for.
So it's important for those industries to be aware of the need not to pay sales tax and the ability to get refunds.
Absolutely. And one of the services my firm offers is a free analysis of going into the company, reviewing whether or not they overpaid their sales tax. And if they are entitled to a refund, we work strictly on a contingent basis and only get paid when they get a check back from the government.
So you can do sort of an audit of the situation to tell them when they have to pay and when they do not have to pay.
Exactly. We actually call it a reverse audit because we're trying to get money from the government.
Okay. And what about printed promotional materials? How do they fare in the issue when it comes to sales tax?
So one of the exemptions that a lot of people don't know about since I think it's 1987 is that New York State has an exemption for printed promotional materials which are used to send something out to a customer or prospective customer for no charge. When it was originally enacted, people were thinking catalogs and brochures, but it applies to many things more than that. Free samples that you mail out, maybe golf balls that you send to customers through the mail, anything that you really ship out for no charge that has your name, your logo, your company saying on it, you get to purchase all of those things exempt from sales tax or get that sales tax back if you paid it.
And does it apply to a catalog?
Absolutely.
So if the catalog is printed and mailed from New York State, the vendor, whether they're in New York or I guess somewhere else, they probably don't have to pay the sales tax.
The vendor, the supplier, doesn't have to charge you the sales tax, so that way you save that cost.
Now, when it comes to capital improvements, what are some of the issues as, building a store or business may upgrade their business, redo their business, start a business? How do sales tax issues come into play with that?
This pertains to both individuals and businesses. So whenever a contractor does work, it's only one of two types of work for New York State sales tax purposes. It's either a capital improvement where the contractor does not have to charge you sales tax, or it's repair and maintenance work. There's no other animal. And repair and maintenance work, of course, the contractor is charging you sales tax. In order to qualify as a capital improvement, it has to meet three criteria. The criteria are that the work being done either prolongs the useful life of the property or adds value to the property. The second criteria is the work being done is attached to the property in such a way that removal of the items in question would cause damage to either the items or the property. And the third criteria is that it's the intent of the property owner for it to be permanent. If they meet all three criteria, then that work is exempt. The contractor is exempt from charging sales tax, and the customer should be giving the contractor a capital improvement certificate so that they don't have to be charged sales tax.
And what are some situations that are clear-cut examples of that, others that are not, and others that may be in the middle depending on certain factors?
Things that definitely are capital improvements are replacing all the windows in a building, putting a new roof on the building, putting a brand new heating system, cooling system in the building, a very substantial upgrade to the electrical system. All of those things absolutely qualify as capital improvements.
And what about the sheetrock or floor or insulation?
Generally, large jobs like that would qualify. However, if you're just replacing one wall because there's a crack in it or a hole in it, there was a leak that damaged something, that's more of a repair and maintenance type service, and that would be taxable.
But if it's something new, let's say for a homeowner or for a business, it was new, a store is being set up, an office being set up, would it qualify?
99% of the time, new construction does qualify as a capital improvement. Again, as long as it's permanent. If you're having your contractor supply your kitchen table, a kitchen table is not ever going to be viewed as permanently attached to your house.
And what about a ceiling fan, especially if you have no intention of taking it?
Ceiling fans qualify, hot water heaters qualify, toilets qualify, dishwashers qualify. I mean, and those are things that, really are only attached to your house by 4 or 5 bolts and 1 or 2 plumbing lines.
What about when it comes to vehicles? Let's say a tractor trailer or other vehicle, maybe a business is buying or leasing vehicles. What are some of the issues there?
So most vehicles are subject to sales tax, but New York State does have an exemption that if an individual, which is unlikely, or a business, which is very likely, is buying a tractor trailer. A tractor trailer is any 2-piece unit. One has the motor and the second piece, the trailer, does not have a motor. If combined, they have a gross vehicle weight over 27,000 pounds, both the tractor and the trailer are exempt from sales tax.
And is that a growing trend to replace the vehicles, or that doesn't affect the demand for new vehicles one way or the other?
It doesn't affect the demand, but what it's supposed to do is give New York dealerships, truck dealerships, either a competitive advantage or at least a level playing field with many out-of-state dealers that also don't have to charge sales tax. And
maybe attract those customers to New York.
Possibly, yes, absolutely.
Because maybe there's more competition, or someone here has an oversupply or has the right kind of vehicle ready to go.
Yes, I would agree with that.
I just want to remind our listeners, we're talking about sales tax refunds, or at least a possibility, and also what items require sales tax and what items are exempt from sales tax. We're talking with Mark L. Stone. He's a CPA and also has a master's in science in taxation. And he's the managing partner of Sales Tax Defense located in Deer Park, New York. And Mark, just tell us your website.
The website of my firm is www.salestaxdefense.com, all spelled out with no spaces.
And of course, you're listening to Law You Should Know here on 90.3 WHPC, the voice of Nassau Community College in Garden City, New York. And keep in mind, whatever you've heard is presented as information only. If you want to get legal or financial or tax advice for your situation, whether you're an individual or a firm, you should contact a professional and someone like Mark to get advice for your particular situation. Mark, what about computers? We're in the computer age. People are constantly upgrading computers. Even if they're working from home, they may have to upgrade computers. What is some of the interplay between sales tax refunds or exemptions and computer hardware and software?
So in New York, there's also an exemption for computer hardware used to design computer software for sale. And what we're finding is that there's a surprisingly large number of companies that are developing apps, and apps are considered computer software. Obviously, when you put them on the Apple Store or on Google, they're for sale. So if you're using a computer to test that, to design that, to troubleshoot that app, that computer is exempt from sales tax.
And what about the servicing or the support services for that computer and that app?
So that's a confusing area of the tax law. A computer can be serviced one of two ways. If something's not working on your computer, it could be a hardware problem. Hardware problems are subject to sales tax no differently than when you bring your car into the mechanic and have him change the brakes. Or it could be a software problem. If it's a software problem where hypothetically your IT guy can dial in and fix the software remotely, he doesn't have to physically be there. Fixing software, configuring software, setting something up, installing software, all of those services, the software, are not subject to sales tax.
So that's the installation is not subject. And what about kind of a servicing contract?
So a servicing contract that either provides antivirus or some type of protection or allows for the upgrades or updates to the software is usually taxable. If there's an IT contract that just is troubleshooting, help desk support, that's not really giving you access to new software, which is not providing what New York State calls protective services, that's not subject to sales tax.
Turning to the idea of school textbooks, or maybe textbooks even for a business, are textbooks exempt from tax? Do textbooks qualify for sales tax refunds?
A textbook that's for a course from an accredited university that leads to a degree is exempt from sales tax in New York State. So you don't have to just buy your books at the school library. You can buy them at Barnes & Noble or even online and still save the sales tax, again, by giving the seller the proper exemption certificate.
And does it matter what form the book is in?
It does not matter, but I don't believe that there is sales tax on ebooks in New York State currently, so I don't think that would matter if you were just downloading a book.
Okay, and whether it's elementary school books, books for Nassau Community College students, or for a law student, those books are exempt?
All exempt as long as it leads to some type of accredited degree.
Okay, and is that something that you think school bookstores and students take advantage of?
I think school bookstores know that exemption, but I think if you ordered something either through Amazon or at, like I said, Barnes & Noble, they would charge you sales tax unless you proactively told them it was exempt and sent them or gave them the exemption certificate.
Now, on your firm's website at salestaxdefense.com, do you have some of this information available and perhaps other educational programs on sales tax issues?
Yes, our website discusses a lot of the laws that are relevant, a lot of the exemptions that apply, and a lot of the services that we provide for when people either want to know more or unfortunately have gotten something wrong and we have to help them fix it.
And you also offer programs and lectures to other business groups or groups that deal with these issues. Maybe they're in contracting or construction or some other field. So
we do a number of seminars. We give out continuing professional education to accounting firms on sales tax. We give out continuing legal education to law firms on sales tax. We speak before a number of chambers of commerce about sales tax, and we're always willing to meet with a business and give them an on-site seminar to train their accounting staff.
And there would be more information on that on your website.
Yes.
And you want to help keep all these people on the right side of the law.
Yes. And a big part of that is knowing what the law is and knowing what their requirements are.
Now, if someone has a sales tax issue, maybe some government agencies coming after them, you also provide a defense to them. That's why you call it sales tax defense.
Yes, and I got my career started as a sales tax auditor working for the government and going out and asking businesses for money. And now I'm on the other side of the table where I defend those businesses when the government asks for money and say, no, they don't owe you money. And if we're lucky, we can even ask the government for money.
And sometimes it's negotiable. Sometimes you actually get money back. But what is, just very briefly, what is that process involved? Of course, the first step is for someone to contact you so they're not fighting this alone.
So the way you get money back, of course, is reviewing the company's operations. What do they do? Why is it exempt? Then looking at their books and records, looking at their invoices to see what they've paid sales tax on. We then quantify it. We add it up. We put it in the spreadsheets. Like any kind of tax filing, there's certain forms that have to be filed in a certain format. We submit it to the government. We submit it always with what's called a power of attorney, so we can talk to the government on your behalf. And if the government has any questions about it, we answer those questions. And if the government gives us a hard time, we defend the claim. And if necessary, we even take it to a hearing or take it to a judge to get that claim.
And especially if the stakes are high, this is not something for amateurs. People shouldn't be representing themselves.
No, because the very nature of it is if you didn't understand the law well enough to avoid paying the sales tax legitimately up front, to then probably go and try to fight with the government to get that money back, maybe outside of, I guess, what people would say is your wheelhouse. And
also what you say or don't say could be used against you.
Certainly if you say the wrong thing, then you don't get a redo or an undo from the government. There's no reset button once you tell them something.
Okay. And one other possibility of a sales tax refunds is empire zones and IDAs. Just explain that briefly.
So New York State has a few areas still that are underdeveloped or economically depressed that they're trying to revitalize. And they try to encourage businesses by moving there by saying, if you move here, you won't have to pay sales tax on the things that you buy to make it a little bit cheaper to set up operations. Very similar to that. All over the state, through the counties, they have the industrial development agencies. And what they do is they try to recruit different businesses to come and set up shop in those counties, to buy land, to build buildings, to renovate buildings, to set up manufacturing operations, to set up distribution operations, to bring jobs into that county. And when the IDA funds one of your projects, very similar to an empire zone or an economic development zone, that business does not have to pay sales tax on the things that they use the IDA's money to buy.
And is that something you help them negotiate with the IDA to get try to get a deal to setting up shop on Long Island or somewhere else?
Getting funding from the IDA is a complex thing to do. We assist with the sales tax pieces of it, but not the entire IDA process.
Let's talk about other issues that come up in your work of sales tax refunds. And what about credit for sales tax paid to other states?
So what New York State says is if you correctly and legally paid sales tax to another jurisdiction and then bring that item into New York, that they will give you a credit against New York State sales tax for that item.
Does that cover a simple vehicle purchase if you paid sales tax in state A and not paying it in state B?
Sometimes. It depends on the state. With cars and other types of vehicles, planes, boats, New York State is a little bit less generous, and they have specific agreements with almost every state that limits what kind of credits you get on cars.
And other states may be less generous as well. So that's something that purchasers should consider in which state they may want to buy the car or vehicle in the state they're going to use it, so they get that deduction or credit for sales tax and don't have to pay it twice.
Exactly. Yes, that's a little bit of planning goes into that.
I'd just like to remind our listeners again, we're talking with Mark L. Stone. He's a CPA and has a Master's of Science in Taxation, and he's the managing partner of Sales Tax Defense located in Deer Park, Long Island. And he's talking to us today about sales tax refunds and the possibility of refunds, and also when sales tax is due and when it's not, and what to do if you have a sales tax issue. I know another issue you deal with frequently, and of course, I just want to remind the listeners, you're listening to Law You Should Know on 90.3 WHPC. And if you missed any part of the program or you want to tell someone else about it, the podcast of this program is available at nccradio.org. Mark, I know that there could be sales tax issues or refund issues with resale. So just explain that briefly.
So one of the few things that are very consistent from state to state is if you're buying something for inventory and you're going to resell it, basically if it comes in the door and then goes out the door, you generally do not have to pay sales tax on that item. So if there's something that you're buying and inadvertently the vendor, the supplier of that item has charged you sales tax, when you resell it, you're entitled to get the sales tax back from the government that you paid to that vendor.
And some other quick exemptions might be for services such as yours or maybe legal services.
Yes, most professional services are exempt from sales tax. And when I say professional services, it's services that New York State require the professional to get a license for.
There are also exempt organizations and sometimes government sales.
So something to know is most people know the term not-for-profit. Not-for-profit is an IRS concept that you don't pay income taxes. New York State then extends that concept and says that if that not-for-profit is trying to make the world a better place, they can apply to New York State and become a tax-exempt entity. When they're a tax-exempt entity, that entity does not have to pay sales tax on anything they buy. It doesn't apply to things that a tax-exempt entity sells. So the example that I like to give is if your church or temple has a gift store, that when you buy a gift from the gift store in your place of worship, they still have to charge you sales tax because you're the purchaser and you're not exempt from sales tax. But when a church or a temple buys new chairs, new pews, they don't have to pay sales tax on those chairs or pews because they're using them.
And another possibility, another issue where sales tax can cause problems is whether you're getting food at a supermarket versus a restaurant, let's say takeout or just purchasing the raw food. Just explain that.
So New York State charges sales tax on any food consumed on premises and any prepared food that's basically served ready to eat. What New York State says you don't have to charge sales tax on is food that's sold in a supermarket style. Supermarket style generally means it's sold by volume, quantity, or weight, and usually requires some type of additional preparation when you get it home so it's ready to eat, as opposed to going to a deli and getting a sandwich, which is ready to eat, as opposed to going into a restaurant and sitting down and having a meal, as opposed to going to a pizza place and getting a pizza that's already cooked that you bring home and is ready to eat as soon as you open the box.
And also, like if you buy a rotisserie chicken or some other prepared food at a supermarket, there's going to be sales tax on that, or they have a buffet counter and maybe the dish is already packed and it's hot. You're going to pay sales tax on that?
Absolutely. A rotisserie chicken is cooked food like the pizza, so that's taxable. Buffets are taxable. Generally, anything served hot, and New York State's definition of hot is 2 degrees above room temperature is going to be taxable, with the exception of things that you're not trying to keep hot. So if Sunday morning you get to the bagel place and the bagels are still warm, they're still non-taxable bakery items because they're not trying to keep them warm. But when you go into that deli at lunchtime and they have that slice of pizza under that orange light and it's only 2 degrees above room temperature, that's taxable.
Now, if they're putting something on that bagel, does it become a taxable item as opposed to just the bagel itself?
Yes. As soon as they do anything to the bagel, it becomes taxable. It becomes a butter sandwich or a cream cheese sandwich or whatever else.
Or bagels and lox. So if you buy everything separate, you might save sales tax on at least part of it.
Yes, if you bought a bagel and if you bought cream cheese and you bought lox and you take it all home, that's all non-taxable. But yes, if you buy it at the bagel place, they should charge you tax on it.
Okay, and just moving on to interior decorating design services, whether it's a home or business, is that taxable, or under what circumstances is it taxable or not?
So yes, broadly, interior decorating design services, including lighting services and sound services, are subject to sales tax, with the caveat that within the 5 boroughs of New York City, it's only subject to basically half of the sales tax, because sales tax is made up of 3 components: a state component, a county component, and the MTA component. And New York City, the 5 boroughs of New York City, is the only place in the state where the counties don't impose sales tax on interior decorating and design services.
Now, is the furniture or the the design part of it, the physical design, is that subject to sales tax?
Yes, furniture would be taxable. And if an interior decorator designer charges you a markup or a commission on the furniture, not only is the furniture taxable, but his markup or his commission would be taxable as well.
Very briefly, in general, when do sales taxes have to be collected, paid, or remitted?
So sales tax needs to be billed with the invoice. Generally, sales tax is due to the state on what they call the accrual basis, based upon the billing of it, not the collection of it. Depending on how much volume, how large your sales are, it's either due the 20th of the next month or due the 20th at the end of the quarter, with New York State having funny quarters. They don't really care whether you collect it or not. They want you to pay it over to them as soon as you bill it.
And of course, paying later is better than paying never and having trouble. And you can always help a company straighten out those timeliness issues.
Yes, if you're just paying late, we set up a payment plan. We often get penalties waived. If you pay never, you might get a visit from the district attorney's office and some police officers, and they give you a free vacation for never paying.
And again, if there's an issue or a business owner discovers an issue, you can try to help them resolve it in a manner that works out for everyone.
Yes, I mean, the goal is to get penalties waived, interest reduced, get the client a payment plan that they can afford, teach them the right rules so they do it the right way and stay out of trouble, and resolve the problem so business goes on. And
maybe even before the authorities have discovered the problem.
Much better to do it before the authorities find the problem.
And just give us your website again.
The website is www.sales, S-A-L-E-S, tax, T-A-X, defense, DEFENSE.com.
And do you have any final thoughts in advising businesses or individuals when dealing with sales tax issues?
The two things that I want everyone to know is if you're not filing a sales tax return and you're operating a business in New York State, you're probably doing something wrong. And if you're a contractor and you're paying sales tax on your carting charges, that's usually not taxable in New York State, and we can get you that money back.
Okay. And the areas can get complicated, and it's good to seek an expert. It's good for everyone.
Absolutely.
To pay taxes when you have to and not pay them when you don't.
I agree.
Okay. I'd just like to thank our guest, Mark L. Stone of Sales Tax Defense, for being our guest on Law You Should Know and sharing this information with us. Keep in mind, it's not intended to be legal, financial, or accounting advice, but just information, and you should get professional advice from Mark or someone else who's well-versed in the area. If you missed any part of the show, you can listen to the podcast at nccradio.org. And please join us next week at the same time for another program on Law You Should Know here on 90.3 WHPC Radio, the voice of Nassau Community College in Garden City, New York.